Yo, what's up, you guys? Welcome back to another weekly market breakdown where we do take a look at the market from both a technical and a fundamental perspective. So, without any further ado, let's get straight into it. Now, the first thing to keep in mind is we have got some very big announcements coming through this week. We've got the FOMC statement, we've got the interest rate decision, we've got the ADP, we've got the NFP that we need to take a look at as well. So please be careful when you approach the market this week, guys, right? According to the interest rates, it says here the Feds are, the Feds are looking at keeping the interest rate at a 5.5 basis point. Something about me doesn't really see that happening because inflation hasn't seemed to have cooled down. So I will be very optimistic to see what's going to happen. From where I'm standing, I'm hoping the Feds could maybe bump up to 5.75. I don't know. But we'll see. It would be a good decision for the Feds to raise the rates just a little bit, just to help with cooling down on inflation. And then going straight into Friday, we have got the jobs report. Now, high CPI numbers, I'm not going to go through that because if you've watched the How to Read Fundamental Data, you should know exactly kind of what you can expect from these numbers to come through. That is anticipated to come through lower. So we just need to wait and see for that as well. So be careful as you approach the market this week, right? Starting over here with the dollar index from a technical perspective, firstly, we can see we are back in bullish territory. Now, the one thing I must say is this was one of those confusing moments in the market where a lot of retail traders, they actually came in, they saw we broke above resistance, came back, tested it as support, broke below support, and then that's where people came in and they was like, guys, support got broken, it is now turned resistance, we must sell. And then the market says no, not today, and then it broke back above that as well. Now in doing so, the market now basically formed what's known as a W formation, right? And a lot of people are asking me, are you still bullish on DXY? Yes, I'm still bullish on DXY. And I guess when we see the interest rate coming through on Thursday, like we saw now, if it does come through higher, and that would be even a lot better for my trade that I'm still holding there as well. So what we got over here is we got what's called a W formation. A W formation is a bullish pattern from a technical perspective. So I do expect this market to continue higher, pull back. This level of resistance also got broken and it's now turned support. I would expect the market to continue slightly higher, pull back, and then continue higher to that level that I was speaking about when the market was actually at this level, right? I'm sure you've watched that as well. Let's go over to the German 30 index over here. Now, all from a technical perspective, we can see here this market is now stuck between this level of support that got broken, that is now acting as a level of resistance. Then the market broke above this level of resistance that is now acting as a level of support. But I would probably like to see this market give us a breakout either to the upside, right? Either there or a breakout to the downside, right? If we do see some bearish momentum starting in Monday, then I probably expect this market to range in here, meaning that if you are a scalp trader, you could potentially drop onto some lower time frames and you can trade this range basically there if you want to as well, right? Next up, we've got the Dow Jones. Now, the Dow Jones, as you can see over here, completed a W formation to the neckline. There you can see we're at that massive spike over there. Market broke above resistance, came back, tested it as support. From here, we can definitely expect this market to continue slightly higher. One thing to keep in mind, which is very important, when there's high impact news expected, as we see now, let me just use another one. Okay, cool. They are all the same because I thought the price was out because of that the data issue. But in any case, one thing to keep in mind, during a week of high impact news, right, the market tends to go almost nowhere until the data is released. So the first batch of data that we've got coming through, let's see here, we've got not that one, is on Wednesday. So we could potentially see almost no movement in the market for the duration of that time. So from here, I probably expect the Dow Jones to continue higher and the market could potentially start this range in here until we get the actual news release, and then we could potentially go either higher or go either lower. Now, if we do get a Benz rate lower than 5.5, then we are going higher If we get a bench rate higher than 5.5, then we are going lower. If you get a bench rate kept stable to where it is now, then we're still going lower. Alright, so just keep that in mind if you are going to trade. But I know most of you don't trade news after it happens, team buy stop and sell stop. Here we got another market as well. If you can see over here, we got this level of support over there, got broken, market came back, tested it as support. I do expect this market to continue slightly higher still, pull back, and then from there we could potentially be on Wednesday, and then from there we can monitor the price action around that level, wait for the fundamentals to pull through, and from there we can make another decision. On gold, what we have over here is we got a market now that had broken below this structural level over here as support, and we've also got a market that had broken above resistance. As you can see, I do expect this market to continue lower. Sorry about that. I do expect this market to continue lower to that level over there. Again, be careful. In a week of high impact news, market tends to go nowhere until the data is released. Let me know what you're trading this week. Thank you for your time, and as always, cheers for years.